We're related to that, somewhat related to the data. Earlier, myself and Will were talking about how the markets in Asia, everywhere, reacting to that jobs data from the United States, which came out on Friday. And we see everybody is excited, or the markets are excited, because of the hope that interest rate cuts will start by September. That's the United States now. Apart from that, also reacting to that on a bigger front is developing nations. That sovereign bonds have slid by the most in 7 months, while a gauge of currencies fell to the lowest in November as fears over higher for longer U.S. interest rate and worsening geopolitical tension. So it does seem, yes, it's a global village. The world is a global village, but led by the dollar or the U.S., or is it not? Well, let's discuss this and how it's affecting Africa, developing economies now. And joining us for this conversation from the capital of Ghana, Accra, is the founder and chief market analyst with CalStrach. He's founder, chief executive of CalStrach, and his name is Ken Carr. Mr. Carr, good afternoon. Good to have you on the show.
Thanks for having me, Ini. Good afternoon.
So myself and Will were discussing earlier about how exciting it would be to have macroeconomic indices of Nigeria moving markets around the world, which is what we see now. Every minute of the Fed, US Fed, moves markets one way or the other. I wonder if you think Africa can get there, or at least can be detached, you know, from being affected by statements from Jerome Powell.
Thanks, Ini. Very interesting question. You know that markets lives and breathes by every word coming out of Jay Powell's mouth. But I think the expectation is that Africa's, central banks and largest economies like Nigeria, Ghana, Morocco, South Africa, and Kenya will maintain tight monetary policy rates and also keep interest rates steady in the near term. But let's take a step back, just as you said. Last week, Wednesday, was the FOMC meeting, and Jerome Powell took the stage, and then he and his committee members maintained the policy rate at 5.5%, and also reiterated the policy guideline that interest rates will be held higher for longer. Now, 2 days later was what markets were waiting for, which was the non-farm payroll or jobs data, which came in at 175,000 jobs created for the month of April, with expectation for 238,000. This fell obviously below expectation, but interest rates also rose 0.1% to 3.9. Now, the story is that how will Africa benefit from this? Well, one thing that comes to mind definitely is the lowering of cost of borrowing. If, of course, companies and corporations will see a rate cut somewhere in September going into election time in the US, we are going to have some little breather in terms of the cost of borrowing being lowered, and then we will also get the cost of servicing our debt, especially with Ghana, since we are on an IMF program, relatively lower. Another thing, of course, is that African economies tend to have foreign direct investment into their countries with lowering interest rates from the US. Companies that borrow at a lower cost from the US will try to seek higher returns in emerging economies, as I've mentioned, like Nigeria, Ghana, Morocco, South Africa, and the likes. But if you ask me, I think we need to wait, because the Federal Reserve is data dependent. The Federal Reserve is also saying that they need to have more confidence in inflation being well anchored and nearing its 2% target before they can consider lowering interest rates. Interestingly, markets are pricing in about 2 cuts or 3 cuts getting to the end of the year. But election year coming in the US, will the United States Federal Reserve cut interest rate 2 or 3 days after the election? I don't think so. So I think it's a wait and see game as more and more data comes in.
What do you say, Mr. Carr, that if Africa looks within and boosts intra-African trade, there'll be a reduction in this dependence on, every word and statement that comes from the United States?
Well, very much so, because we see interest rates and exchange rate volatility whenever there is an FOMC decision. Looking at what Africa currently is doing with the PAPs, and we trying to find ways and means to transact amongst ourselves without really depending on SWIFT or really depending on the volatility on the dollar. I think that gives an avenue for us to be self-dependent and then work together to be able to stimulate our economies and grow our economies without being dependent on the US dollar. But then again, these are early days. We are seeing transactions going through PAPs. We are also hoping that this will continue to ensure that we are more interdependent than dependent on the US economy and as such the US dollar.
Yeah, but I mean, that's also another problem, especially when you look at, yes, we hear of PAPs, but how effective is it? On the other hand, we've been talking about ECO. That is supposed to be like a common currency. We talk about logistics, and it's more expensive to export to a neighboring African country than when you send it outside. So it seems there's a huge mountain of hindrances that is against the continent.
Exactly so. This is more dependent on the political cohesion of our governments. We as Africans need to depend on ourselves, and we as Africans need to look at the political hurdles and then some of the trade hurdles that are confining us from, really seeing the impact of these payment initiatives and see the full benefits of what we stand to gain. At the end of the day, again, it's a political season. A lot of countries will be going into elections in 2024. I think that at the end of the day, come what may and whichever government comes into power, we need to take a bigger look at the future and for the next generation and how we can just work together as a country or as a continent and reduce the trade hurdles, reduce the political hurdles as well, and make way for more and more transactions. Because the sooner we do that, the more benefits we stand to gain and the more interdependence will be on each other than looking at foreign countries and advanced economies.
Mr. Carr, thank you so much. And we do hope, of course, that there'll be more trust and trade within African countries. Mr. Ken Carr is the founder and chief market analyst of Ken Stratch.
All right, thank you for having me.